Trump's turning up the heat again. This time he's aiming straight at the EU and Mexico with a blunt 30% tariff threat.
US President Donald Trump has reignited his trade war, slapping 30% tariffs on the EU and Mexico, two of America's largest trading partners.
And let's just say, diplomacy's out the window. 20-plus countries are now sweating, scrambling to dodge what could be the biggest trade slap of the year. It's not just about usual trade deficits anymore. Trump's tying this to everything from border control to copper prices. So what's fueling this next-level escalation? And where does it all lead? Stick around. Hit the like and subscribe button for updates. And let's get into the details. President Trump has reignited the global trade war, threatening to impose 30% tariffs on goods from the European Union and Mexico starting August 1st. After months of negotiations and a brief pause in April, Trump extended the deadline to give key allies time to reach last-minute deals. But his latest move signals he's done waiting. In letters sent to over 24 trade partners, including Canada, Japan, Brazil, and the Philippines, Trump made it clear, reach a deal or face steep tariffs. While some countries are close to agreements, Trump's message is aggressive and direct. Mexico and the EU have both called the tariffs unfair, but they remain at the table, hoping to finalize deals before the deadline. What's on the line? Nearly $2 trillion in transatlantic trade and billions in North American imports. With only the UK, Vietnam, and China securing temporary relief so far, most US allies are now racing the clock. Trump says there will be no exceptions. This is no longer a threat, it's a policy in motion. And with Trump reigniting the trade war, US companies are in big trouble. If Trump's trade war had a scoreboard, US mega brands are taking massive losses. Apple? Down over $300 billion in value. Amazon? Stripped of $190 billion. Nvidia? Despite hitting $4 trillion in market cap, it lost $210 billion in 1 week, all due to tariff fears hitting Asian supply chains and chip manufacturers. Tech isn't alone. Fashion and retail are bleeding. Nike's value dropped $13 billion, thanks to 95% of its shoes being made in Vietnam, China, and Indonesia. The Gap collapsed by over 20%. Levi's down 14%. Under Armour nearly 19%. Price hikes are inevitable. Boeing, America's largest exporter, saw shares plummet 10%. Norwegian Cruise Lines fell 16%, and even Disney lost nearly 10%. That's billions erased in hours. Finance was hit too. American Express fell 10%. Goldman Sachs and Morgan Stanley dropped nearly as much. Why? These institutions thrive on consumer confidence, and tariffs hit wallets. Even though companies like Nvidia remain optimistic, CEO Jensen Huang praised Trump's bold vision. The numbers say otherwise. The S&P 500 fell 3.5%, the Nasdaq 4.3%, and with metals like copper next in line, things are about to get even messier for American manufacturing. Copper is the lifeline of modern cars, but now it is under a 50% tariff threat. That's hitting automakers where it hurts. EVs need nearly 60 kilograms of copper each, and most of it is imported. The new duty adds up to a cost spike of $3,500 per car for Canadian and Mexican imports, and as much as $5,700 for vehicles from other regions. Ford, Toyota, and Porsche are already raising prices. Porsche expected a $351 million hit just from April and May. Suspension parts maker Hellwig Products reports steel prices have quadrupled since 2018. They've cut hiring and paused capital investment to stay afloat. On COMEX, copper spiked to $12,526 per metric ton, over $2,900 above the global average. Suppliers are now passing the cost down the chain. US companies, already strained, are scrambling. Benchmark data shows that raw materials used to make cars, copper, steel, and aluminium, used to represent 5% of production costs. With Trump's tariffs, that's jumped up to 9%. For an industry already battling thin margins, this isn't just inflation, it's financial triage. The copper tariff might be negotiable, but automakers are already pricing in the pain, and yet the markets barely blinked until they suddenly did. While Wall Street watches the numbers, chaos is building where goods actually move, ports and shipping lanes. At Antwerp-Bruges, one of Europe's largest vehicle transport hubs, thousands of cars, trucks, and tractors bound for the US now sit idle. In just 6 months, US-bound passenger vehicle exports dropped 15.9%, and high and heavy equipment fell by nearly 31.5%. Why? Manufacturers are scrambling to avoid Trump's new tariffs, especially the 25% auto duty and potential 30% across-the-board hikes. The result? Warehouses are packed, docks are clogged, and logistics firms can't clear the backlog fast enough. Container delays are stacking up too. Ships are sitting up to 8 days at port instead of 5, thanks to rerouted shipping and congestion. Chinese automakers are also quietly redirecting shipments, anticipating US rejections. What looked like a trade policy is now becoming a full-scale supply chain crisis, and the effects could ripple into pricing and availability within weeks. Despite earlier optimism, inflation is ticking up, and tariffs may be the reason. June's CPI is expected to rise 2.7% year-over-year, up from 2.4% in May. Core inflation, excluding food and energy, likely hit 3%, marking a steady climb from spring lows. Why? Tariffs on electronics, appliances, and tools are starting to show. Furniture and toys are up. Walmart and Nike have already warned of selective price hikes. Mitsubishi raised prices by 2.1%. The auto sector already passing on copper and steel costs to buyers. While oil prices are stable, WTI is at $68.55. Metal costs are soaring. Steel, aluminium, and copper now add hundreds, even thousands to manufacturing. Trump, meanwhile, is demanding Fed action, but Chair Powell isn't budging. The Fed's forecast now expects inflation to climb to 3% by year's end. With interest rates already high, Powell's stuck between a rock and a tariff wall. Trump's attacks on Powell are intensifying, calling him terrible. But if the Fed's independence is compromised, things could unravel fast. That leads to the final question. Where is this all heading? What's next? The next 3 weeks could define global trade for years. If countries fail to strike deals, 30 to 50% tariffs become reality, hitting everything from cars to copper, appliances to alcohol. Markets are torn. The S&P 500 and Nasdaq are near record highs, powered by big tech and AI. Nvidia just topped $4 trillion in value, but breadth is weak. Most stocks are still 12% off their peaks, and traders are betting on negotiations, not execution. Crypto is rallying. Bitcoin's breakout hints at fear. Gold is up, silver's climbing, and futures point to caution. Dow futures are down 72 points, S&P 500 futures off by 9. Nasdaq down 28th. Markets are pricing in rate cuts, but tariffs could change that. Globally, the EU is preparing $24.5 billion in countermeasures. China is ready to fight to the end. Canada, Mexico, Japan, all still negotiating. Trump says protectionism is policy, not posturing. If that's true, the real economic quake may still be coming. So, in the end, here's where things stand. Trump's tariff threat is shaking entire economies. With supply chains clogged, copper surging, and trading partners scrambling to stay off the blacklist, the global system is bending under pressure. The Fed's on edge, businesses are bracing, and no one's sure where the next blow lands. Trump's not backing down. Whether this is about leverage, legacy, or control, the fallout is already here, and more could be coming August 1st. Do you think Trump will be able to push the EU and others towards a deal on his own terms? Comment below. Hit the like and subscribe for more updates. See you in the next video.